ourselves. Hi, everyone. Good afternoon. I am Patricia Perez, and I'm a volunteer, and I serve as AARP California's State President Emeritus. It is my pleasure to welcome all of you to our Let's Talk Dinero conversation. So, bienvenidos a todos. Today, we're discussing a topic that can be overwhelming and emotional, I understand, and that is how to take care of a loved one or ourselves when we need long-term care services. I know it can be a bit complicated, starting with all the types of options available and the varying costs, but that's why AARP is here to help. Our session today will give information and resources on long-term care services so that you are ready to make informed decisions, whether you are planning for yourself or a loved one. Today, we are joined by Todd Wellnitz, an insurance and financial professional who will share his wealth of information with all of us a little bit. Before I turn the program over to Todd, I want to take a poll of those of us joining us today. Please just take a quick moment to let us know if you have long-term care plan, if that includes insurance. Just let us know. I have a long-term care plan, which includes insurance. Majority don't. And thank you. I see people are still coming in. Not a problem. Welcome, everybody. We'll give it just another second or so. So let us know if you have a long-term care plan, if it includes insurance. So majority are a no. Let me see. Hold on. There you go. Can you see the majority are no? But thank you all for answering that question. Let's see. Let me close this and let's see. Thank you all for those joining us. Once again, my name is Patricia Perez, and I'm a volunteer, and I serve as AARP California State President Emeritus. And we have Todd Wellnitz with us, who's a financial professional, and he's a certified long-term care specialist. So let me turn the program. Let me see. Yep, let me turn the program over to Todd. Todd.
Thank you very much, Patricia, and thank you to the AARP members and guests that have come to join us tonight. Hola, ¿cómo está? That's about all the Spanish I have, but I have staff that understand Spanish.
All right.
I'm going to bring up my slides real quickly, and I noticed that we are already pulling in some questions. So we will be answering those a little bit later. If you put those in the chat, Patricia is going to be kind enough to share those with us. Okay.
Yes, and even if you're on YouTube, please add them in the comments.
Okay. Hoping we can see the slides.
We can.
All right, excellent. So here's our agenda this evening. And over the next 20 minutes or so, I want to go through some slides and leave some time for some very valuable questions. I've been doing this 20 years. I'm an independent insurance broker, certified long-term care specialist. So this is definitely not my first rodeo, and I have plenty of clients that have been in this process, and I'm happy to help you folks with your research. So we'll go through, what is long-term care? What's the long-term care insurance, facts, figures? What is this thing about my family and finances? How do I pay for it? And what have other people said about long-term care? This is just one choice that's going to impact generations. It's your children, your grandchildren, your future great-grandchildren. So I'm glad you're here tonight. Let's talk about, the history of long-term care. Well, back in the 1946 to 64, we had 76 million babies that were born. We ended a war and made a bunch of babies. So some of you may be in that baby boomer category. What that did for the United States government was it put a fear through all of these health insurance companies because they were concerned about bankruptcy. Because back at that time, they were going to take care of you from, when you were born to the grave. So very quickly, the health insurance carriers got together and said, this extended care, we need to shorten that down to basically 100 days with health insurance and Medicare. And that's when long-term care became privatized. So the health insurance companies carved out long-term care insurance. The first policies were where nobody wants to go. It's probably the most expensive: nursing homes, skilled nursing. And then as policies moved through the 90s and 2000s, then we start talking about, assisted living or maybe home care. So the policies expanded. And then now there's been advancements in technology, just like our mobile phones, to where now we have lots of different ways for funding this care and different options for care. But it was all started with the baby boomers. That's what kind of triggered this whole industry. So what are the types of care? Well, there's custodial care at home, long-term care you'll hear, and extended health care. Where do I receive the care? Well, 90% of care starts in the home and then transitions to facilities, which could include assisted living and nursing homes, informal care, which is, kind of family and friends, and then adult daycare, very similar to young children. We're just gonna, kind of babysit them when we have to do our own chores. And then how do I qualify for long-term care? Well, there's 6 activities of daily living that you see there listed. If you can't perform 2 of those, you would qualify for a long-term care insurance type plan or severe cognitive impairment. You folks have some statistics that ran really quickly ahead of my presentation, but would you believe that a couple that's 65 years of age today has a 70% chance one of them will receive care? Only 42% of Medicare, only 42% of care is covered by Medi-Cal in California, Medicaid throughout the rest of the country. Big number is spent on long-term care every year. Right now, it's almost $500 billion. And I get this question a lot. What's the average amount of care? Well, maybe a stroke or a broken hip that I need a year of care, or Alzheimer's, Parkinson's could be 8 or 9 years, but the national average is 3.2 years. And here's where the long-term care claims, the bulk of the claims are. Believe it or not, cognitive impairment. Then you can see physical issues, and the other department is relative to anxiety and COVID and different behaviors in different issues that we're having cognitively that fall into a separate category. This is, just to be real clear, this is the national average. We live in a beautiful state, California. Sometimes things are more expensive, but just here's a good idea of just, what does care cost? So adult daycare, probably in the middle is where a lot of people will focus, is home health aid. That's home health care, someone coming to your home. And that's on average $6,000. And then nursing homes, private rooms. And as you know, please use that calculator on the AARP website, or this is another good one, genworth.com has also some different pricing, and then you can put in your zip code. So if you're in Southern California or way up by the Oregon border, you can see what the average pricing in that area could potentially be for you and your family. Well, you may not need it, right? That's what we hope. But what if you do? It's really about our family. So what is the financial impact of these plans? How are we going to pay for it? Where are we going to get the money? Do we have to ask our family for assistance? What about the physical challenges? Who can actually help us and provide care? Is our spouse able to? Adult children? And who's qualified? You know, sometimes there's a level of care that we actually need that our spouses and family members can't provide. Now we're talking about lifestyle as we move from left to right. That third column is lifestyle challenges. Will our children and grandchildren need to quit their job? They're in Florida. Do they have to move home? Do they have to put their dreams on hold so that they can come take care of us? And finally, control. So who's going to choose where you want your care and where it's received? Who will care for you? And who will manage your care? Some of us on this call, I have 2 daughters that are high schoolers. I know the one that would care for me, and I know the willingly, and I know the one that would care for me, but you know, I maybe not as willing. I may be third on the list. So that's kind of the question there is the control. You know, do you want to be in control? And that's kind of what we're talking about today. Well, if we need it, and that's the big thing, if we know that we potentially could need it, then how do we pay for it? So on the left side, there are government plans. So in California, it's Medi-Cal. Medi-Cal is not Medicare. Medicare is senior health insurance. Medi-Cal is welfare. So you're going to have to require for government assistance. You'll have to be required to do some spending down of assets, income planning. If this is your reality, I highly recommend that you reach out to an estate planning attorney that is familiar with Medi-Cal spend down. And the benefit of that is they will tell you kind of the rules of how to access those types of benefits if that's your situation. If you're looking at a long-term care policy, that's what you're doing is you're transferring the risk to an insurance company. Now, it's your health that buys the coverage. It's money that pays the premium. It's your health that buys the coverage. It's money that pays the premium. So you got to have decent health. Now, I understand some of the folks on this call are in their 60s, 70s, and 80s. Insurance companies understand that. So it doesn't mean you have to have perfect health, but there are some health requirements. And then there's also income and asset qualifications. So if people don't have a whole lot of money, but they really want a long-term care policy, maybe Medi-Cal is their option. So we have to go through that as certified long-term care specialists to make sure it's suitable. And then to the far right, the other option, besides the government, besides transferring the risk to an insurance company, it's all on you. And that means you're self-funding or self-insuring. And then it's just a question of how much of your income can you put towards that cost in the future, your retirement assets, your cash. Do we have to, you know, cash out some of our home equity? Maybe we need a reverse mortgage. But here are kind of the 3 ways that long-term care, the need for long-term care can be paid for. Okay, what are the 3 different types of plans available? Well, we have traditional long-term care, and this is your use it or lose it plan. It's kind of like house and car insurance. You have house insurance because in case you have a fire or flood, you want to make sure an insurance company bails you out. Well, what if you pay 50 years into a policy, never have a flood or a fire? Do you really expect that insurance company to give you all that money back? Nope, didn't think so. This is why these plans have affordable coverage in terms of the premiums. There's no death benefits, so if you don't use it, you lose it. However, as you probably know, these policies that came about back in the 80s, they can have premium increases. And by the way, all the companies with those traditional long-term care plans all sat in a big boardroom a whole long time ago, and they all screwed up the pricing. And that's why they all have these premium increases. The second option in the middle of the screen is your hybrid life long-term care. So think of the traditional long-term care as your flip phone, and then the middle column is a smartphone. So better technology, maybe. Premiums are guaranteed, so you don't have to worry about increases in the future. There is a death benefit, so if you pay a bunch of money in, never use it, all that death benefit goes to your family or friends, income tax free. If you use part of the benefit for long-term care, the remainder, the net benefit, goes to your family. However, the premiums are higher than a traditional long-term care policy. Finally, the third option, moving to the right, is an annuity with a long-term care rider. So there is no medical underwriting. So these are our folks that for whatever reason, and even though we're an independent broker and we work with 50 different companies, if we can't find a home for someone through underwriting, this is the last option. And folks can fund an annuity, and then they have an enhanced income payout for long-term care. There is no death benefit. So those are the three different types of solutions in general that someone could consider if this is a plan that they would like to take care of themselves. And my screen is not responding. Gonna stop the share real quick. Sorry about
Yeah,
that.
that's okay. You can just restart it.
Yep.
Try again.
Thank you for your folks' patience.
No problem. Just a reminder while we wait, if you have questions, please enter them in the chat box. We have an expert here. Todd's going to help us. So the other thing is, I know people are still trickling in. Hello, I'm Patricia Perez, and I'm a volunteer with AARP and serve as AARP California State President Emeritus. And we have a certified long-term care specialist, Todd Wellnitz, sharing his presentation. So, and don't worry, if you missed the beginning, this session is being recorded, so you'll be able to view this video later on demand, and I'll have more information to you later. Now back to Todd.
Thank you, Patricia. Appreciate that. Okay, here we go. Here's some feedback from clients and prospects. Well, should I do this? Why did I do this? The people that purchased a long-term care insurance plan said, gives me peace of mind. It guarantees a pot of money to protect my other assets. It's not my children's and grandchildren's job to take care of me. And this is our love plan to our family. That's the one I like because the couple came up with LTC stands for love to children, because it's really about the people that ultimately could have to take care of us as we age. The folks that did not purchase long-term care, I want to be transparent. They thought it wouldn't happen to them. And someone said, I took care of my kids. They can take care of me. I didn't have enough information to make an informed decision, or we have plenty of money and we will self-insure. So they're just taking on the burden. And I think that may be the last slide. So you're one choice away from changing the lives of those you love. I only have one question for you. What other questions do you have? Back to you, Patricia.
Thank you. Now I was having like trouble unmuting technology. All right. Please ask your questions, in the chat, but, the reality of what Todd was saying is so true. We may be perfectly okay now, but we all have, or we've heard the statistics around Alzheimer's and certain things that we know, are growing each year. And so it's better to be prepared. So let's see. I know that there were some questions. Todd, what about, let's say, cancer survivors? Maybe
Yep.
they don't have cancer now. Maybe they had some and they
Yep.
survived. What options are available for them?
Well, the great news is you're on this call. You're a survivor. Now, becoming an independent advisor allows me to have access to every single option on the table. So We go through medical, we want to get all the information up front from our prospective clients. The more they share with us, what we do is we take that information and we kind of shop it. We say, hey, we've got a gal that looks like this. And they will give us, these insurance companies will give us an opinion. Some will say, no, not right now. Others will say, well, we need a little bit of time to make sure that that person, isn't receiving any more treatment for cancer. I have a client that came to me a year after having a stroke. Usually there's a 2-year window. We found a company after 18 months. She was shocked. And I said, well, the more information we have, the better opportunity we have to find the right company. So that would be my answer to that.
Yeah. And Todd, what if, let's say somebody does have cancer or an illness, what options are available to them? I know you mentioned, let me see, I wrote it down, that health that buys the coverage and money pays the premiums.
Oh man, I tell you, remember that. Yeah, it's your health that buys the coverage. It's just money that pays the premiums. So if the health isn't perfect, we find out, well, when can we apply? So that would be the first part of the answer. The second part is there are income annuities that there is no medical underwriting. So what that would do is it take a chunk of money and prepare, set it aside for income for retirement. And if we needed that money because of a long-term care event, then we could access more of it. But unfortunately, there's certain situations where, the ideal plan may not be available at the moment, but we hang in there.
Okay, so while we're relatively healthy is when we should look at the planning, because once we become ill, then you're saying the options may not be available for us?
That's absolutely, Patricia. So
Okay.
when I get the question, when's the best time to buy long-term care? Well, it's the day before a stroke or a heart attack or Alzheimer's, right? So it's start your research now, make your decision. But the key is don't wait till you have this, shocking event happen in your life medically to then go run and go, do research. So, most people that look into long-term care insurance have people they care about, have people that depend on them, and they want to use their assets to protect those people, for a period of time. It may not last, our policies may not last forever, but at least buys time for the family so we can use the long-term care insurance and then figure out what mom or dad needs to do, whether it's a downsizing or move closer to family.
Yeah, absolutely. And these Let's Talk Dinero sessions focus on hopefully, increasing your financial knowledge to increase your financial security as we age. And long-term care can be devastating emotionally and financially. So it's great to start thinking about it. Thank you all for joining us. And once again, if you've come in late, no problem. We're being recorded. This session is being recorded. So you'll be able to view it later and just catch up on the conversation. So don't worry if you're just trickling in. You'll be able to view this later on. And Todd, in the beginning of your presentation, you were giving information regarding, some of the options, paying for this. And one of them you said was that Medi-Cal covers 42% of long-term care, which is, significant. But if you do qualify for Medi-Cal, do you get different types of services than if you are, have insurance or self-pay for long-term care?
Yeah, so Medi-Cal is really going to be, which it's welfare. So it's really going to be needs-based care. So you'll have less control. So, there'll be in-home support services based on what county you live in. It's very limited, very limited. And then if you need to be in a facility like a skilled nursing facility or a nursing home, you need to find one that has an empty bed. So I live in Northern California. I may have to go to a bed in Riverside or Sonora or Sonoma. So when we talked about control, there's less control, but it's at least we have a program for folks that have less means. And to that point, because this is really more of a family conversation, I talk to a lot of families that maybe the retirees don't have a real flush income or a lot of assets. We open it up to the family. We say, well, let's talk about kids and grandkids. I mean, how are they doing? You know, so it's a family conversation when it comes to finances. I have a client right now, she's 60, her father's 85, and they're spending $17,000 a month for memory care for him. He has a large estate. So we're in a conversation of, okay, you can afford this. Should we, and you're the financial power of attorney for your father, would it make sense for him to gift his estate, to gift you a little bit of money so you can afford a plan? Because ultimately you're going to get his assets. So it's always around strategies of being financially savvy, including family members, because it's really a domino effect that affects pretty much the immediate and extended family.
And, and Todd, I know that right now we're focusing on like older adults, right? And how to, long-term care, but it affects everyone. Like, me personally, my sister became fully disabled when she was 32. So you never know. But with that, you're talking about family. What is the ideal age range to purchase long-term care?
Really funny. So AARP says 60 to 65. Dave Ramsey, you may have heard of him, says in your 50s. Susie Orman, don't know if you've ever heard her name. She says in her 40s. What I would recommend is if you care about your family and you realize that there's some things out of our control. I didn't want Alzheimer's. I don't want a stroke. It could show up unannounced, even though it's not on my calendar. So, for example, I have a life insurance policy that will accelerate or pay the death benefit to me while I'm living. I'm the beneficiary of my own life insurance policy if I have a long-term care event. So I'm 51, don't tell anybody. So this is for people in their 30s and 40s. I mean, they can be building these, have this life insurance type tool that's called a hybrid life long-term care, that they lock in their insurability, which is their health, and they know that they can access that money while they're living. Heaven forbid they have a stroke, Parkinson's, Alzheimer's.
Right. And Todd, how often do premiums increase?
Great question. So the only increase in premiums you will have is your traditional long-term care that we talked about. That's the one where it's like, I can only spend $200, $250, $300 a month. No problem. Those are the most cost effective. However, if you pay in for 30, 40 years and you never need it, you're not going to get any financial benefit passed on to your family, which is fine. It'll take care of that need. And I have plenty of clients that have bought those policies. It wasn't just one company, Genworth, or it wasn't just CalPERS that self-funds their policies, or New York Life, or Mass Mutual. All of them, all of those insurance companies and CalPERS, they all miscalculated. So they all had increases. And that's something I tell clients, that if they're very, very budget conscious, just know that the insurance company can increase premiums. It has to go through the Department of Insurance. The Department of Insurance has to make sure that that mature adult is in a better situation by having the increase. It's not just for the insurance companies to make a bunch of money. And then the increase would then come to the consumer. Now, let's say you get an increase. You're going to have three options. I want to keep the same benefit. I will pay more. I want to keep the same amount of premium, but they have to shave down my benefits, or I'll just cancel it. I would not recommend the last one, because just from our statistic of a 65-year-old couple has a 70% chance of one of them needing care. However, I had a client just last week, John Hancock. I said, hey, keep the premium the same. You can afford it. Let's trim the benefit a little bit, because something is better than nothing.
Right. We have a question, Todd, and the question is, what kind of options are available for somebody who does not have family members who are able to care for them?
Yeah. all of the options are available. Whether it's traditional long-term care, hybrid, or an annuity, depending on health. The number one thing I would say is by you owning your own plan, you can stay in control of your care. And one thing we didn't get into because limited time is, well, who determines where I start? Well, all the insurance companies are going to send you to your doctor to fill out a claim form. And your doctor says, this is where you can start your care safely. Most of the time it's at home. Or actually, we can't leave you at home because you keep leaving the burners on and walking out the front door. So now you need to be in assisted living. And then at the end of the road, the doctor, and this is a form annually, your personal physician fills out. It's a plan of care. Say, we really need to move John or Sally into a nursing home because they're at the end of the road. So there's a lot of control over the cost and where you receive the care. At a bare minimum, I would say if you don't have any family, extended family, nieces, nephews, good friends, charity that you want that money to go to, that you paid into the policy, if you don't need that, if you don't want that, then the traditional long-term care at least gives you something.
So it could start, let's say, with home health services. So you could get care at home and it can go to assisted living, to nursing. So it can progress based on your needs, but you control it if you do have, the right insurance.
Your personal physician determines where the care is received. Exactly, Patricia. There's no insurance company doctor that's going to send you straight to a nursing home.
Right.
So that's an important thing to mention. The other thing is everyone wants to receive care at home. Isn't it cheaper to pay someone under the table instead of a home health care aide that nowadays can be running $30 to $40 an hour depending on where you live? The reason my parents had long-term care is I didn't want any, if there was any abuse or theft, I wanted a recourse to a large company that we could go after. And so that's one thing about having very, very large insurance companies that are bringing in the individuals. And oh, by the way, you as the policy owner or your adult children or your significant other, if they don't like the caregivers, you fire them, you hire somebody else. You want another agency, bring them on. So you're in total control of who comes into your home. You don't like them, send them back. So it's not the Genworth home care company that comes in. And so this conversation can continue to now, let's talk about kids. Well, what could the kids do? Well, the kids could go pick up your medication. They could go pick up your groceries. Of course, they'll go run you to church. Of course they will. Who's going to carry you to bed? I mean, who's going to give you a bath? Who's going to do the stuff in the bathroom nobody wants to do? That's where we carve out that care for the caregivers. But we have our family members vacuum, the grandkids can go clean the yard. So there's a lot of ways you can carve out exactly where you need the caregivers. And that's, important for what do you want your family members and friends to do and not do.
Yeah, and that's perfect. So if you do have family, you can figure out, like you said, carve out what they can do, because, it's a wonderful point that you're making, that having a big, service provider, there's, they're accountable for the loved one's care. If there's, like you said, any, theft or anything, there's that. So if you have, options, that's wonderful. But the other one is if you don't have anyone, right? Your doctor can work with you in terms of, providing you services at home, assisted living, a full nursing home. So you have options, whether you have loved ones or whether you don't.
And let's talk real quick, Patricia, what's reality? Grandma breaks her hip. She's 80, everybody freaks out. Everybody wants to come in. Oh my God, oh my God, oh my God. Just think of how the legacy that grandma would have for her grandchildren and her children, her great grandchildren, like, hey guys, I got this policy. I'm okay. Don't worry about me. Don't quit your job. Don't drop out of college. I've got this. Now, when you come and visit, sure, you can help out, but don't stop everything. Because, you know, this is, I'm taking care of you. So that's why we talk about this affects generations. Because of course they're going to freak out. They love grandma.
Right. I know, and that would be so wonderful to be able to tell your kids, you know what, don't worry about me because I can get help at home. I can do, right? And it's not going to affect your inheritance or your pocketbook. So it's perfect. All right. Here's a question, and unfortunately, I think I know the answer to this one already, but a question was, how do I get financial support for a parent with no assets, $1,500 income a month from Social Security, and already have memory care costs that are $8,000 a month?
That is a challenge. Because if we're already receiving care, that's it's very difficult to find any company that is gonna, take on the risk of of the cost. I would recommend to that person, maybe some of their own personal planning could make sense because now they're seeing it. That's why that woman, she's writing checks for $17,000 for her dad's memory care. She's 60. She's like, A, I don't have any kids or significant others, and I see this is real money. So she's only talking about herself, but I'm sorry that at this point, there's no option in the state of California.
Here's a very specific question. And it's, what is the best option to someone on Medicare and Medi-Cal, but who owns their own property? What are the prices for those of us on Social Security?
So that's a very personal question. And what I would say is reach out to an independent insurance broker in your area, independent fiduciary, meaning they don't have a big insurance company in their email address, and see if they can work through some things with you. And then there's, there's options with Medi-Cal that could be available. And so that's all I would say is, find someone that you're going to feel comfortable, that's independent, they can give you some real advice that could be beneficial. Because, we can't always provide great news or good news. I always want to be transparent, say, hey, here's the news. It's not good or bad. It's just, here's the news. One other thing we do is we will review long-term care policies because people get them 20 years ago and they don't even really know how they work. So I would recommend, if you have a long-term care policy or think you do, go back to your insurance agent, find an independent insurance broker to review it, because you just need to know what you have as we get maybe closer to using it.
All right. Here's a question, Todd. This person says that they've heard that insurance companies are switching policy terms on you without your knowledge. Either one, how do you find out if that happened? Or two, how do you protect yourself against that?
That is a very, very good question. What I would say is, number one, the contract that originally was signed is covered by contract law. So unless I had any more information, they really can't change the contract. Kind of like you take out a mortgage in a house and then 6 months later it's sold, different letterhead, but the same terms. That's contract law. It's very similar to long-term care. What comes to mind, and I'm not saying this is a situation, is, again, reviewing that contract, understanding there's going to be usually 5 steps in a claims process. Sometimes family members, again, I'm not assuming this, I'm just using my experience of being an advisor for 20 years. By the time they want to use a policy, they've been caring for mom or dad for 6 months or so, and they freak out, they find the policy, and they run to the finish line and want the company to pay. So we have to walk them through okay, well, they need this, and they need to know this, and we need to fill out this. So what I'm trying to say is, there's oftentimes a program in terms of the steps they want you to follow, and it's a matter of following those more so than an insurance company baiting and switching, changing terms. And I would go back to the premium change, that when the rates go up, they are not changing the policy that you originally signed for. They're just saying, we'll reduce your benefits if you want to pay the same, very clear. So I hope that helps. I don't ever want to say, I know how families and things work, where sometimes we play telephone, don't always get all the information, but I will say that's the number one reason why people complain about insurance companies is they want to jump from step 1 to step 5 and don't understand there's a process.
Yeah, and like you were saying that you're paying the same premium, but doesn't mean that you're going to be receiving the same benefits in
Yeah,
order to,
the dollar, yeah.
yeah. So if either the premium goes up or the, the services you receive go down.
Yeah.
So, and you've gone through this already, but if you would not mind, please, explain the process to begin receiving the benefits of long-term care.
Yeah, sure. We bought a policy, as I tell my clients, hey, here you go. I want to make sure you understand what you own. They go through, they understand it. I say, okay, now throw it in the closet. I don't want you thinking about it. Okay, but tell somebody where you put it in the closet. Then something happens, we go look at the policy. Okay, there's a claim form process. There's what's called usually an elimination period. Think of it as a deductible. If you want care to start day 1, you pay for it. A lot of people have 3 to 6 months expenses covered, in a savings account. And so oftentimes policies are set up with a 90-day deductible, meaning the first 90 days, there's no care from the, event, call it a stroke or Alzheimer's diagnosis. The company's not going to pay out. Well, that's because we have health insurance, Medicare, that'll kind of take care of those first 90, 100 days. But there is going to be a claim form. It is going to have to be completed by the doctor. It is going to have to go through the claims department. You are going to have to follow through with the claims department people. So there is a process. It's very different from like a fire claim. They're not trying to get one over on you and not pay out your benefits. They're just trying to avoid fraud and make sure that, they follow their process. So the only thing I say is, make sure you follow it, be patient, and call your insurance advisor to be your advocate and see what they can do to help.
Absolutely. And if you're already paying, just make sure your premiums don't lapse. So so that way you have the coverage when you need it. Todd, we have a very specific, well, first of all, if you have a question, if you're watching us and have a question, put it in the comments. We're trying to go through these really fast. I'm sorry, in the chat. Here's a question, Todd. I have long-term care insurance that has increased 100% in the last few years. They've offered to buy out the policy before the next purchase. The person's not sure if they should take the buyout and invest the money or stay with the policy. Right now, they have 0 health issues. What's your advice? Hang in there or cash out?
Go back to your insurance advisor that sold it to you, or find an independent person, or, we kind of do that too. I would absolutely make sure you're 100% certain on what you may be cashing out. Because this is how insurance works, is you're leveraging health. You put less money in than the big benefit you're going to get, that you're going to receive. So cashing out and investing, now we're going into speculative types of investments. So potentially, long-term care insurance is a certainty. And then speculation is, how it goes, right? So I would say be really careful. Make sure you're having a professional. Don't ask your buddies at coffee in the morning. Really make sure this is a big financial decision. It's not a if it'll happen, it's a when it'll happen. So I'd be real careful. Go back to the experts. Find a certified long-term care specialist. Because what we do on reviews is we just say, hey, Ben Franklin, plus, minus, here you go.
All right. Todd, are there specific policies sold for couples or all the policies individual.
That is a
For example,
good,
can a couple pool their long-term care resources if one of them needs a payout, or it's only by person?
that sounds like an educated person. Yes, there are policies that can pool benefits. So, two individuals could have a bigger pool and pool off of it and, work off of it. There are spousal discounts also. So let's say we have an uninsurable person. Husband had a heart attack, yesterday, and his husband wants long-term care. Well, if they're married, there is a discount even if the other person isn't applying. So yeah, again, you really want to go, I can't stress it enough, go to an independent insurance broker. Go to someone that has all the options on the shelf. This is a funny thing I say to clients, and I'll share it because I think we have a few extra minutes. Has anyone on this call gone to a Chinese restaurant and asked for spaghetti and meatballs?
Mhm.
Probably not. So the thing is when you work through certain professionals or companies, they have a menu of offerings. That's what you get. Of course you can't get spaghetti and meatballs at a Chinese restaurant. What are you talking about? An independent insurance broker is like a buffet in Vegas. You got salad, you got dessert, you got beef, chicken, you name it. It's all there. You have every option you can think of. And they're fiduciaries because the insurance company is going to pay them if you buy the policy anyway. Why don't you have access to all the options for your unique situation?
Here's a question, Todd. Does Medi-Cal, I know you mentioned that Medi-Cal can cover up to 42% of coverage? No? Okay.
I think
Uh,
I
uh,
think that's our good friend that came in a little bit late.
Yes,
I think the slide mentioned it, Medicaid, Medi-Cal
yeah,
covers 42% of the cost of everyone that needs long-term care.
good.
So it's not, what we're not saying is
Of the
go to
coverage.
Medi-Cal, they're gonna pay 40% of your tab,
Okay.
and then you're figuring out the 60% balance. And one thing about Medi-Cal is, again, if that's maybe the, lower income, not much assets, they've just changed the Medi-Cal qualifications. So I would highly recommend find an estate planning attorney that specializes in Medi-Cal spend down. They will know exactly the rules because they've changed for the benefit of the consumer.
Yeah. And does Medi-Cal cover home health care?
Very limited.
Okay. So it's
Very,
primarily
very limited.
facility in a facility.
It's primarily facility. It's really limited.
Okay. All right. Question regarding insurance. And if somebody has life insurance, can that be changed to long-term care coverage, or is it completely different and you need to get a whole different policy?
Good question. So if it's a cash value life insurance policy, so there's money in the policy. If we sat down with someone, they said, I bought this 20 years ago and it was life insurance, death benefit for my family. Now I'm getting older and I may need it for long-term care. What can I do with this? And I say, well, there's new technology. You can actually be the beneficiary of your own life insurance policy. And like in real estate, you can exchange investment properties. We can exchange life insurance policies. So a lot of times we're upgrading the technology so that person just doesn't have to die to use a policy. They can accelerate the death benefit, use it while they're alive for long-term care.
Right. I know there's a number of questions regarding Medi-Cal. Todd suggested go to a financial professional before you actually need the long-term care coverage. Go to a financial professional and have them advise you on how what you need to do to qualify and to protect yourself and your assets before you actually need the care. So,
and there are
please.
specific attorneys, there are estate planning attorneys, but they specifically will help with folks in that situation. You may have to pay them a couple of dollars, but they will explain how Medi-Cal works and how you can access the government benefits. So I would highly recommend,
Investing in
and
professional assistance.
talk to your family. None of this stuff is a secret, folks. I mean, the Depression era babies, I mean, let's grow old and not tell anybody anything, and it's all secrets, and go find the CDs and which banks. Hey, I got a, safety deposit box key. Which Bank of America in Southern California is it? These are family conversations. So I would recommend letting your loved ones know where you are financially, because it may be a surprise when you need care and nobody knew that, they could have helped you out if it made sense.
True. The other thing is that it's great to share your health situation with loved ones so they can prepare all of you as a family, so they're not just surprised and it doesn't dawn on them once something happens. So yeah, just please, speak to your family. A question is to please explain the things people should look for, the pros and cons when purchasing a hybrid.
That's a good question. Again, independent insurance broker. Don't go to that one person that has one flavor, vanilla, and vanilla is the best ice cream on the planet.
Right.
So, what you want to be looking for is, number one, is the purpose of the policy long-term care? Number one. And so I had a lady that had 100 grand sitting in a bank account, didn't really need it, was trying to figure out if she should do a CD. We moved it into a long-term care policy. It's worth $400,000 if she wants it for long-term care. She never needs it. It would go onto her family. So we took 100 grand, turned it into 400,000, just like that. The number one purpose of that policy was just for long-term care. See, different policies are designed differently. So you got to figure out, is that the number one reason? Sometimes people want a life insurance policy to pay them tax-free income using the tax code legally. So I'd be real careful that you just make sure you're dealing with an independent broker that knows exactly what your purpose is and aligns those products. And then clearly make sure you understand what you're going to own, because you can buy anything. The key is you want to make sure you understand what you're going to own, because it's not yours. It's a purchase for your family.
All right. Todd, are there resources that can help our viewers find a reputable financial long-term care professional?
That's a tough one.
Hi, this is Jim.
Oh, sorry.
Yes, Anderson.
Sorry. If you could mute yourselves, or AARP, if you can help us mute.
I can't really hear you.
All right.
All right.
Yeah, I mean, I would look in your area. If you want to meet with someone face to face, we do a lot of Zoom calls because folks want experts and sometimes they're hundreds of miles away. However, a website that I use sometimes is ltcconsumer.com. LTC, like long-term care, consumer.com. That's a lot of data and information. When it comes to aligning yourself with a professional, I really want to make sure, find out that they're independent. I mean, if I was looking for my parents, I'm like, okay, that guy has a big insurance company in his email domain. I bet he has to sell their policy.
It. Yeah.
And CLTC is a designation, Certified Long-Term Care Specialist. That means we've done a lot of this stuff. So one question that I know I saw we were talking about earlier, Patricia, is ask the person how many long-term care type policies they've sold and interview them. What types of companies? How do you know when a company is the right one versus another one? There's only one company that has a lifelong payout, meaning if you have Alzheimer's and you need 30 years of care, there's one company that the payout stops when you stop breathing. So most companies, you're buying a pool of benefits, you know, a few 100,000, 500,000. If you go through it, then it's gone, which isn't bad. It just means you bought time for your family to let your house grow in value or let your assets grow in value. But you want to interview the people. And that's something you won't find out unless you interview them. Is there a lifetime payout? And there's
Yeah.
one company.
And in our conversations, our monthly chats, we have talked about estate planning and finding the right, broker, financial advisor, and of course, reminding everybody that AARP has a wealth of online resources. You can go to aarp.org, and actually you can start with a Let's Talk Dinero, aarp.org/Let's Talk Dinero, and it can start linking you to lots of other resources within AARP. But everything from how to identify and find a financial advisor, questions to ask, how to, everything you can imagine to protect your financial security. So please, there it is. Priscilla put it, AARP.org, Let's Talk Dinero. And that would be just a wonderful place to start. Absolutely. And Todd, why don't you recap some final words, advice, things that people should know about, long-term care?
Oh man, you guys got another half an hour? Just kidding.
We've got another few
All right.
minutes.
Number one, if you don't think a stroke person is Alzheimer's, break a hip, a bad driver, T-boning you and laying you up for months and months and years, if you can't imagine that's ever going to happen, then don't look into long-term care insurance. The only people that do understand there's a few things out of our control, maybe like a pandemic, things are going on in our world right now that we can't control. If there's people that care about you, if there's people that rely on you, this is not a long-term care plan, it's a love plan. It's all about the other people. So it shows that you're considerate if you can afford it and it works into your plan. But it's really for the people that ultimately are going to have to care for you, or you're going to provide the time for them to continue their life and come visit you when they can. Your health buys the coverage, money just pays the premiums. There's a lot of ways to figure out how to pay. I mean, some people have IRA accounts, 401k accounts, and they want to pay for their long-term care. We have ways of transitioning that money. Some people have a lump sum amount of money, just want to buy one time. So there's a lot of ways to go skin the cat. We talk about gifting strategies. So there's a lot of different ways to take care of the problem. I think the biggest thing is, it's really just a planning conversation. So if you're thinking about this, it may be a good time to update your living trust. Maybe a good time to talk to your financial advisor. It's just a family planning conversation. That's a little bit of my summary. I mean, when you have a long-term care plan, you are in total control. Your doctor is on your side. You work with an independent broker, you're going to customize a plan. There's not one plan that fits all. And interview these people. Go to the Department of Insurance website for the state of California, insurance.ca.gov. Check the person out. Find out if they've had any, have they had their hands slapped by the Department of Insurance. We've been doing this 20 years, no claims. Nobody said we're bad. Well,
Perfect.
There's bad people. So
yeah. Thank you. And
again,
Priscilla, I'm sorry, go ahead.
It's a family conversation. So don't ever feel like your adult children, your significant other, your spouse, your cousin can't sit in on the conversation if they want to. So,
Perfect.
yeah.
And Todd, I want to give you just like a huge thank you. Thanks to Todd for his tremendous assistance. Mil gracias, Todd. And a reminder to you to visit us online for more financial resilience resources and events at aarp.org/Let's Talk Dinero. These are our monthly chats. And believe me, we talk to experts across the state to discuss everything from debt management, investing, retirement planning, entrepreneurship, how to construct an ADU, and much, much more. And because this topic was so popular. Our next event will take a deeper dive into the financial assets of long-term care. So mark your calendars for Monday, August the 26th at 4 p.m. for our next Let's Talk Dinero with AARP event. Remember, AARP is here to help you and provide you with resources and events to help you choose how you live as you age. Final plug, aarp.org/Let's Talk Dinero. You can view this recording later on and past recordings as well. So Todd, once again, mil gracias, to you for sharing your expertise, and to all of you, thank you for joining us, and I will see you next month. Thank you all and have a great evening. Nos vemos pronto. See you.